On today's episode of our financial accounting class, we'll be looking at trial balance. So let's begin with the meaning of trial balance. The trial balance is a statement of debit and credit balances extracted from the ledgers. In our last episode, while we were completing the double entry for business transactions, we run through preparation of ledgers as well as extraction of trial balance or extraction of trial balance. So let me explain how a ledger looks like in a second or two. Excuse me. So this is how a ledger looks like. A ledger, like we said, is a principal book, is one of the principal books because we have basically two principal books of account. We have ledger and we have journal. So ledger is one of the principal books of accounts that contains different business transactions of a business organization. So each page of a ledger is an account. So this is how a ledger looks like. So each page of a ledger, let's say this page now, maybe Zenith Bank account, GT Bank account, capital account, drawings account, rent account, insurance account, and so on and so forth. So that's a ledger. Then the balance in each account that is in a ledger will be extracted and stated in a form at the end of the period, known as what? Trial balance. So at the end of the period, the balance in each account of a ledger will be extracted and stated in the trial balance. So that's why we define trial balance most often as the list of debit and credit balances extracted from the ledgers. So now that you've understood the meaning of what trial balance is, let's talk about the uses, some of the uses of trial balance. Number one of the uses, or let me say the primary use of the trial balance, is to test the arithmetical accuracy of the postings in the ledgers. Each time a recording is made in the ledger and you want to be sure if those recordings are accurate or they are intact, then you will have to extract a trial balance. And when the trial balance is extracted and the two sides are equal, it means the arithmetical accuracy of the postings in the ledger has been checked or is intact. That's what it means. However, when the two sides of the trial balance is extracted and are equal, that doesn't mean there are no errors in the recording or in recording in the ledger. That means there are no errors. There are errors, and those errors will not be shown by the trial balance, and they have been committed by the bookkeeper or the accountant, but they will not be shown by the trial balance, and the trial balance will still be equal. So those errors, we call them errors that the trial balance will not disclose, or errors that the trial balance will not show, or errors that will not affect the agreement of the trial balance. So we are going to list some of those errors now on the board for you guys to for you to understand how when a trial balance is extracted and the two sides are equal, and having the perception that there are no errors in the books. No, there are errors, even though or despite the two sides of the trial balance are equal. So these errors now, we have error of omission, error of omission, we have error of commission, error of commission, we have error of principle, error of principle, we have error of compensating or compensating error, compensating. And number five, we have error of original entry, error of original entry. Then last but not least, we have error of complete reversal, error of complete reversal of entry. So when any of these errors occur, it means the trial balance agreement will not be affected. And these errors are called errors that will not affect the agreement of the trial balance. So the basic use of the trial balance is to test the arithmetical accuracy of the postings in the ledger. So I hope that is understood. So next, basis of preparing the financial statements. Before the financial statement of a business organization can be prepared, trial balance must have been extracted because it is from all the figures on the trial balance that will be used to prepare the financial statement of a business organization. And financial statement, like you all know, is the same thing as the annual report of a company. And some of the contents of the financial statements includes statements of comprehensive income, statement of financial position, statement of cash flow, and statement of changes in equity. All are the contents of the financial statement. So, in other words, I can try to explain the fact that trial balance formed the basis of preparing the financial statement by talking about the vehicular chain. We call it vehicular chain of business transaction, and it has to do with how business transactions originate. Where do they usually originate from? And where is the destination of all these business transactions? So, excuse me, let me uh, put that on the board for you to be able to understand what I mean by that. So, you have, we call it vehicular chain of business transactions. So, business transactions are usually obtained from the source document. So from source documents, which we have talked about in some of our previous episodes. So source documents are documents from which business transactions are obtained. Then when they are obtained from the source document, then they will be subsequently recorded or classified into different or appropriate subsidiary books. So from source document to subsidiary books, subsidiary books, subsidiary books. And subsidiary books are also called books of original entry or books of prime entry. Then from subsidiary books, you have all those to be posted into the ledgers. Ledgers. Then from ledgers, you have your trial balance extracted. Trial balance. Then after you've extracted your trial balance, then that trial balance will now be used to prepare the financial statement. So you prepare your financial statement, which is the annual report of a business organization. So this is the vehicular chain of business transaction, how business transaction originates to how they will be eventually used to prepare the financial statement. So from source documents to subsidiary books, where they will be recorded in different subsidiary books. Then from subsidiary books, you post them into the ledgers. Then from the ledger, you extract your trial balance. Like we said, trial balance is the list of debit and credit balances extracted from the ledgers. Then from the trial balance, it will form the basis on which the financial statements will be prepared. Next, it is used to determine errors. Trial balance is used to determine errors. Now, I did say earlier that when the two sides of the trial balance are extracted and are equal, it means there are errors in the books. And also, when the two sides of the trial balance are extracted and they are equal and they are not equal now, it also means there are errors in the books. So let me also demonstrate that on the board for everyone to see. Now, let's say this is a typical trial balance. This is a typical trial balance. You have dates, you have particulars, then you have debits, and you have credits. Look at this. Let's say this is a trial balance of a business organization. And let's say you have debtors here. You have debtors, you have creditors. Debtor is an asset, current asset, basically. Let's say debtors is 200 or 200, a creditor is also 200. So in this regard now, the debit side and the credit side total is the same. So here total is 200 and total here is 200. So in this case, the trial balance, the two sides are equal. And this doesn't mean there are no errors. There are errors. But those errors will not be shown by the trial balance. And those errors are what we have listed earlier on. Error of omission, error of commission, error of principal, error of original entry, error of complete reversal of entry, and compensating error. Those are errors that the trial balance will not disclose or that will not affect the agreement of the trial balance. It will still make, if any of those errors occurs, the two sides of the trial balance will still be the same. That's what we mean. Now, with respect to this, trial balance is used to uh, determine errors. Let's say the balance here for debtors now, we now have 195 and here we have 200. Here, the two sides are not equal. We have the total for the debit to be 195 and you have the total for the credits to be 200. So in this case, the agreement of the trial balance has been affected. That means there are some errors that affect the agreement of the trial balance here. So trial balance will help you to show that when the two sides are not equal, there are errors. So let's list some of these errors for you to understand them. So these errors that we want to list now, they are those errors that will affect the agreement of the trial balance or that will not make the two sides of the trial balance to be equal. So let's list them. So we have them. So we have error of transposition. Transposition. Error of transposition. When this error occur, the agreement of the trial balance will be affected. It will not be the same. Then we have error of single entry. Single entry. We have error of casting. Error of casting. We have error of partial reversal. Partial reversal of entry. Error of partial reversal of entry. Then we have last but not least, we have omission of omission, or we call it most times partial omission of balances when extracting the trial balance. So omission of when balances when extracting the trial balance. Extracting the trial balance. So when any of these errors, omission of balances when extracting the trial balance. So when any of these errors occur, then you will have the agreement of the trial balance to be affected, meaning that the two sides will not be the same. That's what we have. So trial balance helps to, or it is used to determine errors which had occurred or which might have occurred in the ledgers or recording in the ledgers. Then the next, basis of financial balance comparison. Like I did say, trial balance is prepared every year, at the end of every year, before the financial statement is prepared. So every financial year, which is 12 months, an accountant must prepare the trial balance. So for different periods, you can compare different figures for different periods using the trial balance. So trial balance for, let's say, 2021 with that of 2022, you can compare the figures for the two accounting years. Let's say creditors for 2021 and 2022. So you can use the trial balance to compare the two figures. Or let's say the sales revenue for 2021 and 2022. You can compare the sales revenue for the same business organization, whether there has been an increase in the sales revenue or there has been a decrease. So that's with respect to that. Trial balance serve as the basis of financial balance comparison. So you can use trial balance to compare two balances or three or four balances for different accounting periods. And last but not least, it helps to show the balances of figures in the account at a glance. So if you want to know the balance in every account of a business organization at a glance. Just go to the trial balance and that will show it. This is what we mean. Just like we demonstrated on the board. Look at this. So let's say we have a trial balance. We have dates, we have particulars, we have debits, and we have credits. Look at this. Let's say this is the creditor, and this is creditor is a liability, and all liabilities are credited. Let's say that's 300. Now this 300 in the creditors on the trial balance now shows that this is the balance in creditors account for the end of the at the end of the period. That's what it shows, 300. Then if you also have, let's say, insurance is an expenses, and all expenses are debited. So let's say this is 100. This 100 you have here with respect to insurance means is a balance in insurance accounts. That's what we mean by it helps to show the balance of figures in the account at a glance. In any account, the moment you can see the figure on the trial balance, it means that is the balance brought forward for the particular account on the trial balance, like we have demonstrated now for creditor. That's the balance in creditors account is 300. The balance in insurance account is 100 naira. So that's with respect to the uses of trial balance. Uses of trial balance. So let's go to golden rule of trial balance. How do we record on the trial balance? Very important, because this is where you have to understand whether you are going to debit a particular item and you are going to credit a particular item. Very important, and it's very simple. It's easy peasy. Golden rule of trial balance states that debit assets and expenses accounts. Anything assets or expenses, they must have a debit balance. So assets, for example, you can have fixed assets, which is the same thing as non-current assets, must be debited. Current assets must be debited. Tangible assets, intangible assets, wasting assets, fictitious assets, liquid assets, any kind of assets, they must have a debit balance. That's with respect to that. Then expenses also must have a debit balance. Expenses like discounts allowed, insurance, electricity, commission paid, interest paid, wages and salaries, and all that. Increase in provision, all those are expenses accounts, and all of them, we have lots of them, which we are going to be talking about in our subsequent episode. All these items, which you can find on the trial balance, and you need to understand them very well. So in our subsequent episode, we are going to talk about them in details. So expenses that we have mentioned now, all of them must have a debit balance. That means their balance brought forward usually must have a debit balance, or the balance after the balance carried down, the balance brought forward must have a debit balance. That's assets and expenses. Then the second golden rule of trial balance states that credit incomes, liabilities, capital, provision, reserves. All these five that we have listed, they must have a credit balance. Incomes must be credited. Incomes account like, let's say, sales account, discounts received, commission received, decrease in provision for bad debts, uh, interest received, and so on and so forth. All those are examples of incomes, and incomes accounts, all of them must be credited. Liabilities. Liabilities can be short term or long term. Whether it's short term, that's current liabilities, or long term, they must have a credit balance. They must be credited. That's what we mean. Long term liability, like let's say long bank loan, mortgage loan, debentures, and all that. Those are long term liability, which we also call non-current liability. Non-current liability. They must have a credit balance. Then also current liabilities. Those are going to be settled within a period of, let's say, 12 months. Current liabilities like trade creditors, bills payable, bank overdrafts, insurance owings, rent uh, accrued, or rent due, or electricity outstanding. All those are liabilities. That's current liabilities, and they must all have a credit balance. Capital. Capital represents owner's interest or owner's contribution or owner's equity in the business. So anything the owner contributes to the business must represent capital, and capital accounts will always have a credit balance because it represents the owner of the business giving something to the business. So capital accounts, like some would say, capital represent what the owner start the business with. So whatever the owner start the business with will be recorded in a capital account. So anything capital account we always have a credit balance. Then provision. Provisions are part of profit. We are still going to be talking about all these in detail. So this is just a brief explanation. Provision is part of profits that is set aside for known contingencies or to cover for known losses or specific losses or loss in the value of an asset and all that. So anything provision, be it provision for bad debt, provision for discounts on debtors, provision for depreciation, any kind of provisions must be credited. Then we have reserve. Reserve is also part of profit or surplus that is set aside to strengthen the financial base of the business. So be it capital reserve or revenue reserve, the two must have a credit balance. So all these are items that you can find on a typical trial balance. Assets, expenses, incomes, liabilities, capital, provision, reserves. These are the items you can find on a trial balance. And generally, in financial accounting, all financial transactions must be classified in any of these 7 items which we have mentioned. Now, let's put all these items in a typical trial balance. Then we'll be able to talk about whether they are going to be debited and credited, which we have talked about already. So, golden rule of trial balance, I repeat, asset and expenses are debited, incomes, liabilities, capital, provision, and reserves are credited. So, this is a typical format of a trial balance. Like we all know, you have dates, you have particulars. Excuse me, let me rub off this part. Date, particular, then we have debits and we have credits. That's what we have. That's the format of a trial balance. So in a typical trial balance, we have assets, you have expenses, you have incomes, you have provisions, you have reserves, you have liability, you have capital. So all these are what a typical trial balance consists of. So let's try to talk about the fact that some will be debited and some will be credited. Assets, we said the golden rule of trial balance states that all assets are debited, so they must be recorded on the debit side. Assets, which we have talked about earlier on, or which we've mentioned. Then expenses too must be debited. Incomes must be credited. All incomes must be credited. Provisions must be credited. Reserves must be credited. Liabilities must be credited. Then lastly, we have capital must also be credited. So what you have here is when you have the two sides must be equal. And I did say that when the two sides of the trial balance is equal, let's say this is 20, and for the debit side is 20, and the credit side is also 20. When the two sides of the trial balance are equal, it doesn't mean there are no errors in the books. There are errors, but those errors will not be shown by the trial balance. And we've mentioned 6 of them: error of omission, commission, principal, original entry, compensating, and complete reversal of entry. They will not be shown here. Then also, when the two sides of the trial balance are not equal, let's say you have 15 here and you have 20 here, it also means that there are errors in the books. And those errors, trial balance will show them basically. Trial balance will show these ones when they occur. But the previous one, it will not be shown, or they will not be shown. But these ones, when the two sides of the trial balance are not the same, the errors will be shown. And those errors are error of transposition, error of single entry, error of partial reversal of entry, casting error, omission of balances when extracting the trial balance, and all that. So this is what we have with respect to the golden rule of trial balance. All assets are debited, expenses debited. So you never find expenses account on the credit side. You will never find an asset account on the credit side. You will always find asset and expenses on the debit side. Then you will never find all these 5 on the debit side. No, you will always find them on the credit side. And just a little aside, that if you want to know whether uh, an asset will have a debit or credit balance, the first balance in each account determines the balance that an account will have. Let's say cash account. Cash account is an asset account, current asset basically. Cash account, it has a debit balance, and that means it's an asset. It will always be debited. Although at times cash account could have a credit balance, but the normal balance of a cash account is debit. But when the cash account is overdrawn, then it becomes overdraft, which is liability. So in that regard, it will be credited. Now, another aspect of the trial balance which I want to explain is this. So since you already understood it, let's go a little bit further regarding the golden rule of trial balance, because these are the foundation. Trial balance is one of the topics that forms the foundation of financial accounting. So you have to understand all these basics, because when you understand these basics, we are just doing the beginning topics now. But by the time we start solidifying the foundation, then you will have no problem understanding all other perhaps intermediate topics or advanced topics which you are going to be treating in this class. So this is what I want to emphasize here. Look at this. Assets will always have a debit balance. So any asset account will always have a debit balance. And the more you debit an asset account, the more the balance in that account will increase. That's what we are saying. So when you are debiting an asset account, it means you are adding to that account. So the more you debit an asset account, the more the balance in that account increases. And when you credit an asset account, it means the balance in that account will be reducing. That's what we're saying. So we're going a little bit further. Expenses account will always have a debit balance. So the more you debit an expenses account, the more the balance in it will increase, or the more you are adding to that account. That's what it means. When something increases, it means it's adding up. That's what it means. Then expenses account, like we said, we always have a debit balance. And the more you debit it, the more the balance in that account will increase. And when you are crediting an expenses account, that means you are lessing, you are reducing from that account. That's what it means. Income account, we always have the normal balance is credit balance. So when you are crediting an income account more, it means the balance in it will be adding up, will be increasing. That's what it means. If you are crediting, let's say sales, for example, sales is an income account. The more you credit sales account, the more the balance in it will increase, or the more the balance in the account will add up, will increase. That's what we mean. But the more you debit a sales account, because sales account is an income account, like we said, if you are debiting a sales account, it means the balance in that sales account will be reducing. That's what we mean. So if you are debiting an income account, you are lessening it. You are reducing that account. The same for provision. Normal provision account should have a credit balance. So when you are crediting a provision account, it means you are adding it. Then if you are debiting it, it means you are what? Lessening it. Reserves, if you are crediting it, it means you are adding up to that account. The balance in that account will be increasing. Then when you are debiting a provision account, it means the balance in it will be reducing, or you are lessening from that account. That's what it means. Liability, normal balance, credit balance. So if you are crediting it, it means you are adding up to that account. And if you are debiting it, it means you are lessening from that account. That's what it means. And lastly, for capital, if you are crediting it, it means the balance in it will be increasing. That's what it means. So you are adding it. When an account increases, it means you are adding it. Or when you are adding to that account, it means the balance in that account is increasing. That's what it means. And if you are debiting it, it means you are lessening it. Perhaps we should take one or two practical examples of this a step further, golden rule of trial balance. So let's take a step further so that you'll be able to understand uh, what this law which you have established actually means. So let's say cash account. Cash account is an asset account. Cash account is the normal cash book. So cash account is an asset account, and all assets will have a debit balance. That's the golden rule of trial balance. All assets. So this is the debit, this is the credit. When you receive cash, you debit your cash book. And when you pay cash, when cash pays, you credit it. So the more you receive cash, the more you debit cash, and the more the balance in it will be increasing. So let's say, for example, we receive cash from Dangote. We receive cash from Dangote, let's say 200 naira. We receive cash from, let's say, Sanwo. I know some are going to be like, which Sanwo? It's your governor. Sanwo. So Sanwo, we receive 100 naira from Sanwo, 100 naira. You can see the balance in the cash account is increasing from 200 to 300. Let's say we receive cash from Zenith Bank. Look at it, Zenith Bank. We receive 15 naira. The balance in it keeps increasing. So the total balance in these accounts now should be, or is, I say should be, is not should be. So the balance in this account now, that should be 300, that's 350. Then the balance carry down now. The balance carry down to make this side equal to this side. That's, we put 350 here. So 350 is what we have here. Then we bring it down to the same level with this. So for them to be equal now. So for every balance carried down, there must be balance brought forward, which is this 350 here. So that's 350. So the balance in cash account is debit. Why? Because cash account is an asset account. Now, based on what we emphasized earlier, that when an account has a debit balance and you are crediting it more, the balance in it will reduce. Now, look at this. Let's do a little bit adjustments to these cash accounts. Look at this, because based on the previous example, the balance in these accounts, that's the balance brought forward, is 350, right? Yes. And let's assume now that all these are received by cash account, that's 350. Now we're now saying cash is now paying. Let's say cash, we paid for postage. Postage. Let's say we paid postage 5 naira. Okay, let's say 15 naira. We paid for postage by cash. So cash is paying now, we credit it. Let's say we paid for insurance by cash. Let's say that's 15 naira. Look at this. The balance in these accounts now will no longer be, that's the balance brought forward, will no longer be 350. It has reduced because we have credited these accounts. So crediting these cash accounts means the balance in the accounts is reduced or has been lessened or has been decreased, because the balance in this debits has been affected by the what? The credit entry here, which means that cash has given, cash has paid, just like the double entry rule. When you are paying the credits, when you are receiving your debit. So the balance in this account now, let's do that now. So the total here is 350, then the total here is 100. To make this side equal to this side now, that's you will be having balance carried down here now. Balance carried down of that's 250. Look at this now. So the total here, you add this plus this, that's 350. Then here also, that's 350. So the two sides now are equal. Then what's the balance carried down now? Balance carried down will now be 250. This is the balance, sorry, balance brought forward. So balance brought forward is 250, not 350. It's balance carried down that will form the balance brought forward. So look at this now. Why is it that the balance has reduced to 250 instead of 350 that we had initially? Because we have lessened from these cash accounts, which ordinarily has a debit balance. But because we are crediting it, it means the balance in it has reduced from 350 to 250. So that's the rule of if an account has a debit balance and you debit it more, the balance in it will be increasing. And if you are crediting an account more that has a debit balance, it means the balance in it will be reducing. So that's a step further of that trial balance golden rule that we emphasized earlier on. I repeat, if an account has a debit balance and you want to increase that account, debit it more. If an account has a debit balance and you want to reduce the balance of that account, credit it more. And if an account has a credit balance, and you want to increase the balance more, credit it more. And if an account has a credit balance and you want to reduce the balance in that account, debit it more. That's just what the rule explains, which is the rule of trial balance. So I need to go. In our next episode, we are going to be looking at questions on trial balance. And with that, you'll be able to understand what we have learned regarding the golden rule of trial balance, regarding how to debit assets and credit uh, other items we have, debit asset and expenses, credit incomes, and all that. So in our subsequent episode, you'll be able to get to understand how questions are solved with respect to trial balance. So uh, you've come with me this far. It seems you like this video. Please ring the bell, subscribe to our YouTube channel. It helps the YouTube algorithm. That means it helps our videos to get to other uh, potential students that this video might be of great help. So share our videos to friends and relatives. Ask a friend to uh, come watch our video on YouTube. So what more can I say? I wish you all a excellent and brighter future as regards your academics. So do have a beautiful one. I'll see you on my next video. Bye bye.